Hi there, Trace. This is Brad Gilbert with the week ahead preview. All right, now let's just have a look what's where we finished off Friday. The PCE price index numbers, and I guess the University of Michigan sentiment there as well, but missed the mark. Right, we're only expecting 0.6. It's a good inflation number that the Fed looks at, and once again, just missing that mark or no clear strength, sort of supports what the Fed's been saying that inflation is going to level out, but it's not enough to make it a buying situation or a selling situation. If you have a look here across the dollar index, it's just drifting sideways, right? And just to finish up on Friday, equity markets it looks like they're almost closed, right? The US bonds priced a little bit high, so the yield's just off a touch, but no significant moves there. And if you have a look at the major currency pairs, with this lack of clear direction, we aren't seeing any standout opportunities. Now, if I just take you to the chart, just to give you a bit of a look before we come into the macros for the week, after the Fed sort of brought forward their guidance, managing the potential interest rate hikes, all that sort of stuff, we've seen the euro slowly claw its way back, and now it's leveled out. Pretty much the same as sterling, Aussie, and Kiwi. I think they've just come back and not overshot the top side, but they were sort of looking particularly heavy. So I think the market's gone in short Aussie Kiwi, and we've seen a bit more of a squeeze to the top side on those pairs. But I would expect those to level out as well until we get some clear data. Up the top here, you got the dollar index drifting sideways, as is dollar Swiss. Although unlike the dollar index, dollar Swiss has got a bit more room to move to the downside before it hits that support line. And dollar yen lacking direction there as well. And you can see petering out all momentum dollar CAD, right? So we're in a situation where you see, that's why it's so important to hit these moves when they happen, right? When the Fed moves, because that's the first trade is always the cleanest. And then from here, especially as last week or after last week, the data didn't match up with the strong picture. It wasn't weak, but it wasn't strong. And then we start to lose all momentum. Now, that a lot of that diffusion there came from the Fed, right? There's very mixed opinions here from the Fed with regards. What page am I on there? Let me just get that up. All right, so a bit of mixed views and opinions from various Fed officials about inflation pressures. Are they going to wane? Have the Fed gone too aggressive with their forward guidance, etc.? And that really diffused things somewhat. Now, even the chairman, Jerome Powell, he was, pretty relaxed and sort of pretty confident that the inflation would sort of just dribble off as we move forward. Now, it's one of those things. That's all well and good. They've given us the backdrop. We know exactly what to expect. Now it comes into how do we map out the week, right? This is going to be very important because once again, first week of the month, we've got the US non-farm payrolls, right? So if you just scroll down through your calendar, this is, once again, it's almost like the non-farms are coming around very quickly these days because they are obviously a major focus. The Fed has been talking about maximum employment and all these sorts of things, but with inflation going through the roof, it's going to be very interesting to see if the employment numbers can match up with the strong inflation. If we start to get growth in employment in the US, consistent growth, well, then that's going to support a stronger dollar, and vice versa. Weakness here, it probably goes a long way to saying, you know what, inflation probably was just a blip on the radar. We should start to see it come off. So this is really crunch time for the next move. Unfortunately, right, we've got to wait until Friday. Thursday, you have the initial jobless numbers. They come out weekly, may give us a bit of a look in. They aren't exactly connected, but same sort of data. Hopefully there's some sort of correlation. Now, so mapping that. So we know that that's on Friday. So coming into Thursday's trading, if there's no sort of level of variance in the numbers, then you are going to see the markets really go quiet ahead of the non-farm payrolls because that's where the answers are, right? So all the guys in all the banks sit there and they go, well, we're going to know the answer Friday. Do I go aggressive Monday, Tuesday, Wednesday? Well, they won't unless something happens or something falls in their lap. And what we're talking about is looking at the numbers here, right? So even the nationwide house prices out of the UK, if you see significant change in any of these data releases and the Eurozone economic sentiment numbers and the prelim German CPI numbers, right? These are a good opportunity to get into euro and sterling for that matter. But I like euro a little bit more. There's sort of less tangible things impacting euro than sterling. And you come back down, we've got some peripheral numbers here, the Case-Shiller numbers, US consumer confidence, okay, all coming out Tuesday, Wednesday. And then we come down, we've got UK GDP, employment out of Germany. So there's a bit to play for every day of the week. Now, the start of each month, right, especially obviously the first, we start to get all the data. Now, the Tankan data, back in my day in the 90s, the Tankan was the biggest number, especially out of Japan, massive manufacturing base. So that's a good one to look for. So if you are looking for ideas, Thursday's Tankan is probably a good one to look at the yen and yen crosses, right? Match up where market focus is going to be with the data. That's how the markets work, right? So, and then coming into, as I said, Thursday, Friday, there's a whole bunch of, data out of Europe, a bit of North America. But as I said, the Friday's going to be all about the non-farm payrolls. And for those who are just joining us, before you sort of jump up and down and you read a lot about this, how exciting this number is, and it's the best trading opportunity. It's not the best. There's high volatility. You've got several numbers being released at once. And if they aren't all in line, you get a discombobulation in price action. But what you can get, if they are all strong or all weak, even a minute after, you can see exactly what's happening. You can see where momentum is, and that should carry through to the following week where we get the US CPI numbers, right? That's the whole cycle of what we're seeing at the moment. The US dollar is the one economy and one central bank that is really in play. So that's why we're looking at this very closely. So all majors will be in play Friday, but leading into that, just check out where the data's coming out. That may give you a lead into where the opportunities lie. All right. So there's, I was going to say, there's plenty to play for. You've just got to relax and wait for these opportunities to arise. I know everyone's getting frustrated with a lack of connection and consistency with the US numbers, but that's nothing that you can change, right? And looking at your daily charts, if you are struggling for some ideas on your dailies, on your technicals, look at the daily charts here. The dollar, it's still sort of broken back higher here. Dollar Swiss sort of mid-range. Dollar yen is still cracking to the top side. Seeing some wild price action here around resistance there on dollar CAD. It's a bit of a tricky one. Euro, well, you know what? It's still sort of breaking down. So keep an eye on that weak. So this is an easy one. Weak euro data or strong US numbers. Euro should sort of drift lower quite comfortably. And you can see here sterling as well. Well, it is sort of trading sideways now, but still below that previous support line, as is the Aussie and Kiwi, right? So when you look at your hourly charts compared to your daily charts, it tells you a different story. This is the long-term trends or medium to long-term trends. What's actually happening there? If you can get the short-term trend on the hourlies matching up with what's going on the daily charts, that's an easier trade as well. So make sure you focus on that. And just to pick off the currencies, if you have got Metastock, make sure you are keeping a close eye on obviously US equities, US equity futures during the Asian session. You've got the majors here, bonds, commodities, etc. But you can actually sort of match up. If something big comes out in the US, right, we're looking for the relative strength of these various pairs. This should all light up blue or all red if the dollar's moving in a specific direction. It'll make it easier for you to target the major currency pairs. And then once again, if we do get some European numbers come out, specifically strong or weak, keep an eye on the euro relative strength. Once again, you'll be able to see if there's uniform price action or direction across the euro pairs, and that goes for sterling, the yen, Aussie, etc. as well. Right? These templates aren't here to sort of look gorgeous. They're there to help direct you into where to trade. All right, so this is a really good week. And I say that because not just because it's the first week of the month and we've got non-farm payrolls, but there is a lot of first, second tier data across the board on a lot of pairs, in particular euro. I like to look at that. And it's going to be exciting once we get through Thursday, come into Friday. The build up around the non-farm payrolls, it always happens. It's going to be pretty hectic. Hopefully we get some numbers going our way. And ideally, hopefully we get a bit more clearer direction on the US dollar as we lead into the non-farm payrolls. All right, guys, have a good week. All the best. Cheerio.